Hey folks, welcome to a product review at Finominal. Today we're going to look at Spider's DoubleLine Total Return Tactical ETF that trades under the ticker TOTL in the US. Now, the ETF has two objectives. One is to maximize the total return, and the second one is to beat the US Aggregate Bond Index. Now, the fund manages around $3.5 billion and charges 55 basis points. So let's see how this fund has done and if indeed it has beat its benchmark. So we're going to select the Bloomberg Barclays US Ag Bond Index. And over here we see the performance since, 2018 of total versus index. And we do see that, it has achieved the same return over that period, right? But it certainly hasn't beaten its benchmark. So that's one aspect, right? But let's find out a little bit more in the sense of what has been driving the returns of this ETF. And we're going to do a returns-based factor exposure analysis. And over here, we do see the exposure to the major asset classes. We do see, as expected, right, that the exposure to bonds has been consistently positive. Having said that, currently it's close to 1 versus at the low point. This is a little bit post the COVID crisis. It's been close to 0.4. So that does change a bit. This fund has a total return target, right? That's one of its two objectives. And they can also invest in high yield emerging markets debt, right? So not just investment grade US bonds, right? There is more discretion with regards to exposures. Having said that, we don't see so much in terms of exposure to equities or foreign currencies or like foreign denominated debt, right? Because the betas to the other asset classes are pretty flat. From an alpha perspective, we can look at a cumulative return contribution. We do see that the majority returns can be attributed to US investment grade bonds, right? We do see that there's been some exposure to the US stock market that has been helpful, but there's also been exposure to equity factors that has been negative. And so you might ask yourself, hey, why do I have exposure to equity factors or to the stock market within a fixed income product? But that is simply because they, as much as have the discretion to invest in EM bonds or high yield, fixed income, and those are actually highly correlated equities, right? So high yield and EM debt sits somewhere between treasuries and equity from a capital structure perspective. You also can see that the alpha has been positive and growing, right? Pretty much until 2022 when interest rates started rising, and then the alpha turned negative, and so it's been a little bit less consistent since then. Now that's for the fund on a standalone basis, right? So, I mean, in terms of has it achieved attractive total return is a bit more difficult to evaluate, right? We can look at the Sharpe ratio, which we'll do in a second. But from the second objective, in terms of beating its benchmark, it has not done that. But let's have a look in terms of how total compares to some peers. So we have selected three kind of like other bond ETFs, one from Fidelity, PIMCO, and Vident, as well as the ADG index, right, from a benchmark perspective. Now, the first thing that I want to do is look in terms of how similar or how different the underlying portfolios are. And we can look at the holdings of these, right? And we do see that the US Aggregate Bond Index, right, has more than 10,000 underlying bonds, right? So it is highly diversified. We can see that the product from Vident is most concentrated with about 219 underlying bonds versus total has around 1,500. Having said that, even 219 underlying securities is still diversified, right? So none of these is highly concentrated, especially compared to equity products. Now, are these funds actually comparable or are these good peers that we have selected? And over here, we have a simple matrix that shows the correlation to stocks and the correlation to bonds. And you can see that, broadly speaking, none of these, well, 5 products has a high correlation to the stock market as expected. The product from Fidelity is most highly correlated, right? But it's only 0.2. And all of them, of course, are highly correlated to the bond market, right? And so that kind of makes sense, right? So it seems that these are viable peers. Moving on to performance. So here we have the track record of TOTL and those 4 other ETFs since 2015. And we actually do see that TOTL has, well, not really differentiated itself. We do see that the performance is almost identical, right, to the product from PIMCO or the product from Vidend or AGG. The one product that has, well, almost consistently outperformed is a product from Fidelity, but it's worth recalling that this had the highest exposure to the stock market, right? So it might be that it just is more risky, right, in terms of having exposure to high yield bonds, right? So that might explain the delta. And we can actually look at that in terms of comparing these 5 ETFs from a volatility and return perspective. And indeed, the product from Fidelity, which had the highest return, also was most risky. Versus, most interestingly, right, the product from DoubleLine, right, TOTL, was the least volatile, but also features a relatively low return. Now, if we compute the Sharpe ratios, we do see that TOTL had a Sharpe ratio of, well, 0.3 since 2015. So we're talking about 8 years or so. And that broadly is in line with the Sharpe ratios of other products that range from 0.24 to 0.36. Now it is worth mentioning, right, that TOTL is the most expensive one at 55 basis points. And so that is worth considering. That kind of concludes our product review of the SPDR DoubleLine Total Return Tactical ETF. As mentioned, its 2 objectives are to achieve well, an attractive total return, which difficult to evaluate, but from a Sharpe ratio, it does not differentiate itself here. And second objective was to beat the benchmark, which is the US Aggregate Bond Index, which it has not done either. And then considering that you're paying 55 basis points for that, which is expensive, right? It's probably worth looking for other fixed income products. Hope that helps. Have a nice day.